Hello, everyone, and welcome to TradeFinder Live. It's great to be back with you all during this trading day and during trading hours. Lots of exciting topics to get into for this session, but first and foremost, we must cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. It's available on our website at all times, so please feel free to read that in detail at your leisure. But other than that, we have Powell testifying before Congress, so all eyes on that. And Rob, I think we can just get right into it. How you doing today?
Sounds good. Happy Tuesday afternoon to you, Zach. Welcome, everyone, to TradeFinder Live. As you mentioned, Chairman Powell is testifying in front of Congress today and tomorrow. Call this the son of Humphrey Hawkins. There was legislation from Senators Humphrey and Hawkins a long time ago that, quote, required the Federal Reserve, and I say that in quotations because Congress can't require the Fed to do anything, to testify twice a year. And then that legislation ran out, and the Federal Reserve, out of the goodness of their heart, has decided to continue to do that. So that's what's going on in front of the banking committee, all kinds of stuff. And it's just the typical rah-rah with 15 minutes of fame of those asking questions of Chairman Powell. But as you mentioned, all eyes are going to be on it. They're going to follow every word that Powell has to say. So let's just jump, instead of looking at the S&P first, let's just jump directly to the bond market and see how that's reacting, because that's where the bigger moves are probably going to be made by his comments. So far, he's pretty much reiterated urging caution on further rate cuts. So nothing really too outlandish or out of the ordinary there. They've been pretty much telegraphing that. If we take a look at the chart of TLT, and again, this is the 20-year, so this is on pricing. Prices and yields move inversely. So when we have a little bit of a tick down in price, that means yields are ticking up just a little bit. And that was likely on the comments of urging caution for further rate cuts. And nothing, again, that the Fed hasn't said. Probably going to be the second half of the year or towards the end of the year, if there are any further rate cuts this year at all. And so that's how the bond market's reacting. We're sitting right on the 30-day moving average. That's that fuchsia colored line. The lime green line is the 10-day, and then the royal blue line up here is the 50-day moving average. So we're now back in this expanding triangle. So we had a little bit of an expanding triangle. Looked like maybe we're going to break to the upside on price and yields were going to come down a bit. That turns out to be a failed breakout. So you break out and then you come back down. And then you have to reassess, because there's no such thing as two failed breakouts. So if we were to come down here and come down further in price and up in yields, we would have to expand this triangle. But for now, we just look to see if it's just forming a slightly larger triangle here, or just potentially a false breakout and resets, and it can still turn and go back to the upside again. Just because it failed this time doesn't mean it can't do the same thing again. So the status quo, I think, is actually pretty healthy for the equities market if bonds don't do anything crazy as far as prices and yields moving up or down in either direction. If we just kind of stabilize through here for a while, the market's already looking ahead for no rate cuts for a while. And aside from anything unusual happening in the bond market, I think we can go back and look at the SPY and say that would be constructive. Now, the issue on the SPY is that we have this triangle here. We did make a wave 5 because we took out this previous wave 3. Now, whether or not that wave 5 is done or not is going to depend on how we break out from this triangle. So with the triangle, if we broke to the upside, we'd break above resistance here at 610, and we're probably off to the races up here to that wave 5 midpoint around 630. Note that it's a little bit further out, not until April or May, that the algorithm is forecasting that move. So we could consolidate a little bit more, but with this triangle, I feel like the breakout's probably going to come sooner rather than later, but it could be a slow breakout and move to the upside here. The question is, what happens if we break to the downside? We break to the downside, it's a little cloudier of a picture. We feel pretty good about going long if we break to the upside, but if we break to the downside, you can't really look at creating shorts in the market or going short the market in general unless we come all the way down and break this wave 4 and disqualify this pattern. So that's a pretty significant move down. The best you could do is if you see a downside breakout that starts to follow through, maybe you could get a quick shorter term bearish trade on the market. But to go longer term bearish, it's going to be a pretty significant move. So I think you'd have to be nimble to short the market on a downside breakout, but that's a possibility. Other than that, if you're a bit more conservative minded, you're going to have to wait a while for the downside movement to see if that's where things do indeed go. All right, so let's go ahead and look at TNX. I know a lot of you ask about that on the U.S. market update. I used to show the TNX all the time. I switched to TLT because it's kind of a midpoint between the shorter term and the shorter end and the longer end of the yield curve. But you can see that we did have the zigzag on the TNX. Nothing really has changed too much from the U.S. market update over the weekend, other than we're getting a little bit of a bounce up off this 100% extension. So that would be what you would expect with a B wave at 38.2. You look for a 61.8% extension. If you go to an extended C wave, which is just simply a movement to the next fib level, that brings you to 100%, and that's what happened. So we've already had one extension of the C wave. So normally that's about it. Sometimes we get two. Very rare cases you get three fib extensions on the C wave, but this is kind of the norm to get one. So bouncing off this level makes a lot of sense. And again, we'll watch and see if that holds. Now the TNX, remember, this is showing rates, where TLT is showing prices. This is actually showing rates. So rates have come down on the 10-year, but now bouncing a little bit. So rates a little bit up on the 10-year, prices a little bit down on the 20-year, meaning rates are slightly higher. So just a slight tick up in rates, but nothing too significant. And unless Powell gets cornered into saying something he doesn't want to say in these two-day testimonies, I don't really think much is going to occur. We'll have CPI and PPI coming out, are the next big economic reports to look at moving forward. But the main thing is that we want to see which way we break on this triangle on the SPY. If we take a look at the VIX, we don't get a whole lot of information there either. It's just kind of still in this range that I've drawn here, with the very high end up around 22.5. But the primary range on the VIX is right in this area between 12.5 and 17.5. 15 is the midpoint. That's just where there's congestion. That's what I call when you trade through a level. So you can see how we've traded through 15 a number of times. So when you do that, that can act as temporary support or resistance, but it's just more congestion, and it's more of a short-term move where longer-term resistance or longer-term support can give moves or bounces that last just a little bit longer. So we're just kind of in the middle of this range, so nothing really exciting here on the whole idea of the VIX. Let's take a look at the DIA. So if we go to the Dow, we have not taken out the wave 3 high. We got ever so close, but haven't quite taken out that previous wave 5 high. We did have 125% extension. So note that on the on the Dow, we're in a wave 5, where if I go back to the SPY, the wave 5 was just recently struck, and then we backed off a little bit. So slight difference in the charts, but not too dramatically so. Just the main thing was you see how this pattern played out, where the SPY just barely took out the wave 3. And then when you look at the Dow, it was a very long wave 5 that went up towards the upper end of the tap box. So similar in price in that they're both trying to figure out what to do with the recent wave 5 high that was hit, but just quite a bit difference between the two markets and how they got there to the current wave 5 and the resistance that they're dealing with at this moment. We've got a little bit of a triangle trying to form here, not quite as well formed as the one on the S&P, but there's a little triangle here. And if we can break above that, what I would be interested to see is if this wave 5, being that it's already extended 125%, could that relabel to a 3 if we were to take this out? Or is it just going to be an extended wave 5? That would be something I would be watching on the DIA if we do indeed break to the upside and move higher. But it does seem like we're going to get some sort of a movement out of the markets here in the not too distant future with these triangles forming. And then when we go to look at the Qs, obviously going to pay attention to those with what's going on in the bond market. A little bit of a triangle here too. So we're getting some consolidation in all these markets. So if you take a look at this here, there's the triangle on the Qs. This one has not taken out the previous wave 3. So the algorithm is actually not even sure this wave 4 is done yet because it's still green. What that means is it's the active wave. And when the circle turns purple, you can change these colors on the software. And by the way, if you haven't gotten a copy of the software, go to hubb.com and get yourself a copy of it. You get free Elliott Wave, you get free live intraday Elliott Wave. And while I'm talking about the software, etc., I did want to make you aware of a profit dynamics class that I have coming up. This is going to be a deep dive into all things trading, using the software, using AI signals, using the AI signals from the software. We're going to get into option selection. We're going to talk about Greeks. We're going to talk about how to construct the best trade for a given situation. And when the AI is showing you a signal, what's the best trade to put on there? So it's a 2-day class, an hour and a half session each time. Very deep dive, as I said, into all things trading. And invite you to join. You can see the link on your screen. Love to have you come along with us. If you're newer to the world of options, you don't know what the Greeks are, etc. We're going to go through all of that. So it would be a good comprehensive class, especially for those that are newer. And it could be a good refresher course for those that feel like, I understand Elliott Wave and I understand the Greeks pretty well. Maybe it never hurts to have a refresher. So love to have you join us. The first class is on the 17th of February. So please sign up and join us for that. All right, so now I'm going to come back over here to where we can break out of these Qs. And what I was talking about is the algorithm, by the way, is written exactly as Ralph Nelson Elliott wrote it. So we'll teach you Elliott Wave rules, not specific rules to an individual software program, because there are programs out there that have personal adaptations of Elliott Wave principles, but this follows them exactly as they were written. So we could break to the upside here and that wave 4 become confirmed and maybe break to a new wave 5 high here, or we come back down and could completely break to the downside. So you can see now we've shown the SPY, the Dow, not as much on the Dow, but still there, and a pretty well-formed triangle here on the Qs, getting ready to move. Now the IWM is slightly different. It's going through consolidation as well, but it's in more of a trading range than a triangle. So we can say that the markets are agreeing on consolidation. That's what they've been doing. Whether or not they're consolidating in the triangles as those other markets are, or in this trading range as the IWM is, it doesn't take a triangle formation for a market or an individual security to break out. But when you see the triangle formation, then usually that means a breakout is coming. And when I see a very low ADX, usually means the breakout is coming in the not too distant future. But we break out of trading ranges as well. It's just not as definitive to me. But still means the same thing as far as consolidation. Note that this wave 4 is purple, which means the algorithm has confirmed that that is a wave 4. Now, we don't know for sure that we're in the wave 5 yet, but we could be. We would need to break above 230 on the IWM for me to feel pretty comfortable that that wave 5 is underway. That could coincide with an upward breakout of the SPY triangle. But we also have to respect the fact that 220 is still there, not too far away. And if we were to break down to the lower end of this trading range and then break down, could this pattern relabel? But for now, we're in the trading range. You can see, let me keep using this arrow here. You can see a little bit of a tick down today in the IWM, and that's because small caps, if you've been listening to any of the U.S. market updates, you know this, so I don't need to go through it again, are very susceptible to rates. So with a just slight tick up in rates today, it was enough to give us a slight tick down on the IWM. So I've made the argument over the past few weeks that the IWM or the Russell, if you like the RUT instead of the IWM, has been acting the most in concert with the bond market of any of the markets, where the other markets seem to be a little bit disconnected from what the bond market is telling us, but not the IWM. It's been spot on the Russell. So we'll see if we can hold this level. You can see the consolidation that's existed here with all three major moving averages at the exact same spot. You can't really get much better consolidation than that. So we're going to see a movement in the market here within the next few days. I can't tell you whether it's up or down, but there's going to be some sort of a directional break in movement. So let's go ahead and take a quick look at the dollar, which is kind of moving higher again. I hate to see that. I'd like to see us trade in this range and perhaps drift down a little bit. I was hoping we would break this 50-day moving average and start to maybe move back down, but it's hanging in there, and it's got a little bit of a bid today, and that's because rates are ticking up a little bit. So as long as the bond market stays calm, I think we stay in this trading range on the dollar, and again, hopefully maybe drift a little lower. I would like to see the dollar show that this wave 5 is indeed complete. I mean, it went exactly to the midpoint of the tap box. It couldn't have been more spot on with it. And by the way, when you're trading Elliott wave, if you trade other markets, whether it's currencies, commodities, cryptos, whatever you like to trade, Elliott wave works in all of the markets, and the more liquid a market is, the more accurate the Elliott wave is. So if you're looking at a stock chart and it's a very thinly traded stock, it'll have an Elliott wave pattern. But if you're dealing with, like my favorite stock in the world of Elliott wave, Google, that's extremely liquid, it's going to be more accurate. So when you look at the currency markets, there's a lot of liquidity in the currency markets. And so Elliott wave works really well if you're a currency trader. So if we look at this, and you can see that we went right to the midpoint, do we come back down to the previous 4? I'd really like to see that, because I think that would be constructive for the equities markets to continue to move higher. But if we're going to continue this bounce higher, like we have going on right now, and we go up further in the tap box on the wave 5, I think that would be detrimental. I did make the comment that I felt like we were going to hear from companies during this earnings cycle on the exchange rate causing problems to the bottom line. Exchange rate fees go directly to margins. And we did have a handful of companies that mentioned it. The most recent, Amazon, talked about it, so felt a little vindication there, but not nearly as many as I thought we would get. So I feel like for those that reported earlier with their fiscal quarters, et cetera, those didn't have as much of an effect from the currency exchange rate. That really the big move in the dollar started in October. So I do think next quarter you're going to hear that's going to be a common rhetoric, I'm pretty sure, on the next quarter's earnings reports on the effects of the exchange rate, unless somehow we get a big move down in the dollar in the very short term. But I don't see that happening, so I think you'll hear that. So I think the next earnings cycle is going to be a little challenging. We'll wait and see. If we move into energy, take a look at natural gas, and commented on this yesterday to the Evo Trader live show for subscribers at evotrader.com. You could see maybe we're getting a little bit of a bid. I've been so sarcastic about UNG on the fact that every time a pattern seems to be setting up, it seems to fail. We did have this downward zigzag pattern, which worked on the way down into November, and then we kind of went through some consolidation. But now we've got, take a look at this. We have this big wave 3. We've got a wave 4 that's solid right at a 50% corrective level. It's been labeled here as confirmed by the algorithm. We came down, tested the 50-day moving average. We're moving back to the upside. And when we add in this zigzag pattern here in the wave 3, we have a really nice zigzag encompassing part of the wave 3 and the wave 5. And you can see the C wave extension goes into the tap box on the wave 5. Now that would forecast a pretty decent move in natural gas from here. The question becomes, why? What would the catalyst be to move natural gas like that as we are nearing mid-February? The market always looks ahead, so we're starting to look past the winter time, which is normally a pretty peak usage time of the year for natural gas. I know there's a lot more uses in natural gas now than there used to be, but where's the catalyst to drive it that far higher? So I'm still suspect of this, even though you can't argue that that's not a very well constructed 5-wave pattern there. The 10-day moving average never crossed the 30 to the downside. We've got another move higher today, so we're a tiny bit above the 10-day moving average. If you wanted to be super conservative, you could say, let me see UNG break 20 first, and then I'll trade that next move up towards 22.5. But if you were more aggressively inclined, maybe this is the time we've been waiting on. Maybe this is the time to try to jump in and take a shot on UNG. Now, if we look at the DMI, it's not quite confirming the move yet. I need to see that ADX get above 20, above the negative directional indicator. We're getting separation between the two directional indicators, and they're more susceptible to the day-to-day movements of the market, where the ADX is a little slower, a little more lagging, but the two directional indicator is quite responsive day-to-day. The separation there looks encouraging, but you can see setups like this in the DMI, and then the ADX just rolls over. It's important that it actually breaks above 20 and is above that negative directional indicator. So even if you were aggressive, you could say, you know what, it's pretty close. Let me just give it another day or two, and let's see if we get confirmation from the DMI. Then I'll jump in on natural gas. So super aggressive, you could take a shot now. If you're more moderate or slightly aggressive, let that DMI set up a little bit more. If you're conservative, wait till it breaks above the previous wave 3 high. So there's a few different ways to consider the natural gas. Now, if we go look at oil, USO, don't like to see this, but it's not too surprising. Once again, a pretty well-formed 5-wave pattern with the wave 4 right at the 61.8% level. We did break below the 50-day moving average, and we've turned around and immediately gotten right back above it. So as soon as we got this bearish 1030 cross, we seem to be turning back around. So a little bit of whipsawing there on the 1030 exchange, and this move up these past 2 trading days on oil are worrisome to me. It's great for the energy sector performing well with both natural gas and oil moving up, but none of those are good for the longer term health of the consumer. So, we are a consumer-driven market. So certain sectors certainly benefit from this, but not the consumer in general. And how far do they have to go before it affects consumer spending would be something that people would be looking out for. Let's move to the metals. We'll take a look at gold, which had one heck of a run, and hanging in there surprisingly well today, even with the slight tick up in rates, which is a little surprising to me, but we are above that 10-day moving average. So we've gotten above the 10-day moving average. You know the rule, no security in any time frame gets too far from the 10-day moving average. If we were to close right where we are, we have a doji, so maybe that puts a short-term halt to the upward ascent in GLD. But for now, gold has made one heck of a breakout move. We're also at the area where you would expect the move to go. So even though the algorithm is saying we're not sure the wave 3 is done, I think we're at an area where gold could pause a bit here. Let the 10-day moving average catch up at least, maybe do a little bit of backing and filling, but that was a very nice breakout. We did have a strangle on GLD in the volatility portfolio. We got out a little too soon. We could have stayed a little bit longer, but we still had a nice trade, and you don't go back and second guess good, profitable trades. Now, SLV just continues to say, we're not following your lead, gold. Pretty interesting here. We have a 5-wave to the downside pattern here in SLV. Something's got to give here in the metals. They don't always have the same pattern, but they normally move in a similar fashion. So the patterns can be slightly different, but the movement's generally the same. Hasn't been that way lately here. Back to gold with that big breakout of the triangle, and then SLV, you can see, yeah, we had a little bit of a movement here, kind of in a big trading range, but we still have a qualified 5-wave to the downside pattern here. Now, maybe we break higher in silver. I'm still waiting on silver to play catch up to gold. I feel like there's a good argument to be made that silver should take off and come up here and test these highs from October. But it doesn't have to do that just because I think it makes sense. We could still hold this 5-wave pattern and head lower in silver. So perhaps this big move in gold is done and we get a significant retracement. I think, again, that would be tied to rates. If we saw a big upward move in rates, then that could generate that sort of a movement in gold. And then maybe silver just says, we just never had that big run. We moved a little bit here and we're headed lower. So right now you have to kind of just watch SLV and see if we can move back up. We're getting a little bit of a bounce off the 10-day moving average today, but we need to take out this wave 4 that's at a pretty strong fib level. And then perhaps we have the green light to go up and test those October highs. So just oddities that are going on between the metals that don't normally happen. Moving into the crypto world, taking a look at Bitcoin, got a bit of a triangle here, and the same song remains the same. And we got to get that clip, Zack, to cue that up. But still consolidating the post-election big run-up, and with a move that far, an extended consolidation is healthy. We do have a little bit of a triangle forming here. It's not the greatest triangle, but more importantly, I think, is this trading range here where you have roughly, let's just call it the round numbers of 100,000 there on the upside. Here's a medium point where we have some congestion where we've traded through it, and then the support down here. Now, this level of support is key because if by chance Bitcoin were to ever come down and break that level, because of the vertical nature of the move off of the lows up to 90,000 plus, if we were to break down below 90,000 and down below this support level, there's nothing to hold Bitcoin from coming all the way back down to 70,000. Now, we're a long way from that now. I'm just talking about something to watch if we were to come lower. I don't think so at this point in time, but it's just something to keep your eye on. We could very well break to the upside out of here. The whole crypto world is waiting on more information about what the administration is going to do on purchasing Bitcoin and possibly some other cryptos for the strategic reserve. I don't think that the administration is going to come out and tell us when they're buying. I think that would be crazy for them to do that, because if they do, then everybody's going to buy it and the government would be paying more. So why would they want to do that? So what's going on behind the scenes is speculation at best right now. But I think Bitcoin wanted a little more of a definitive call from President Trump before, when he said he was setting up a committee to analyze it and all that, make recommendations, etc. It's probably a smart thing to do, but I think the crypto world would have liked him to say, hey, we're going to start buying now. And again, I don't think that would be a smart thing to do. Talking about Ethereum, we actually just recorded the crypto show over on the Hub Financial channel. So if you visit this channel a lot, but haven't gone to the Hub Financial channel, you can see the crypto show there. We had a lot of talk about Ethereum, so that's the subject matter. So I won't spend too much time here. Go there and you can watch the recording. Give it some time to get posted, perhaps within a day. You can go take a look at that. We talked about some behind-the-scenes things that are going on with Ethereum, and we all know about Trump's tweet, etc. But for now, just kind of going through consolidation mode here. But as long as we're under the 10-day moving average, a little bit of nervousness there. There's been some shorting, but more details in the Hub Financial Crypto Show. Now let's go and look at XRP, the one that has been kind of the darling of the meme crowd over the past few months since the election. We had this triangle, talked about how that was my favorite pattern. When you have a vertical move into a symmetrical triangle, it's going to break out. It did, broke to the downside. I don't like it when the wave 4 is just one day, but we came down there and immediately reversed. And this was, the tariff tantrum Monday here that moved down. Zack coining that phrase, and then immediately back up. And now we're trading around the 250 range. And we'll see if XRP can gather another bid for another momentum run. If you're bullish, the idea that when a triangle breaks out, part of the triangle rules is you go back and test the point of the breakout. Could be some bullishness there. So hopefully it bounces back up to that point if you're long this, and then you have to wait and see from there. That would be a point of, all right, we did what we're supposed to do. Let me see what happens from this point. But it would be more constructive to get it back above the 10-day moving average first. And then Solana, we took out Cardano and put this in because more people seem to be interested in it. Right down at a very important level of support down here. And we'll see if we turn and bounce to the upside here in Solana. A little bit of a triangle there as well. So we're going to see some movement in the crypto world here in the not too distant future. Again, can't pick a direction on these, but a break below this support level on Solana would certainly be problematic, as it would have some room to move considerably further down from there. So we'll see how that plays out as well. Let's take a look at some of the international markets. We've been watching the Aussie market pretty closely, especially with the movement in gold. But it's more broadly resource tied than just gold. So the movement in gold's not been enough to move it significantly, although we did get a pretty nice little bounce here. But as you can see, it's still in a wave 5 to the downside. So right at 50% on this and hitting resistance on these lows that were support in September, October, and December. So old support becomes new resistance. And it's playing out that way. So the question becomes, can we break above it? Because if we can break above this level at 25, we probably have a pretty quick run up to 26 and a half. You can see that was a quick move to the downside. So once again, no more resistance in the way other than important levels here at the 50% corrective level and the 50-day moving average. And so right now, this could roll over and head down into a wave 5. And if we did get a breakdown in both gold and silver, that could generate that movement. Or if we can break above 25, maybe we can potentially relabel this pattern. But right now, you just have to look and say, this pattern must be respected because it's pretty well formed. It's a well-formed and symmetrical wave 5 pattern. So it's going to have to break this pattern for relabeling, or we have to look at the potential for that moving down from here. And then one that we certainly have talked a lot about here since the election inauguration, Canada. Trump constantly talking about tariffs, 51st state, all the stuff, irritating all the people up north in Canada. But for now, just looking at the chart, no wave 5 pattern. We've bounced up. We're looking for an impulse pattern to set itself up. We got a little bit of resistance right here at 42. That was resistance back in October. traded through it in November, broke above it, but came back down through it. And I just think that the market in Canada could be a little bit affected by short-term news. When news comes out, it usually only moves things on a shorter-term basis. The longer-term moves are anticipated with Elliott wave, et cetera. But a lot of people talk about the market moves on news. Most of the news is already priced in. The market digests news rather quickly. It's when something unexpected comes out as a news event that can move things short term, aside from what the larger pattern is. And I just think that it's precarious to try to trade the EWC right now when it does seem to be a news headline coming out almost every day between the U.S. and Canada at this point. As we move across the pond over to Germany, you can see that the move continues. Confounded by this. I was happy to hear on the financial networks that there's a lot of other seasoned investors that really don't know what's going on with the EWG either. The only thing they can come up with is the Eurozone is ahead of the U.S. as far as cutting rates. The ECB just cut rates again within the last 2 weeks. It might have been last week. So they're ahead of us in lowering rates, and equities markets love lower rates. So that on its own could be enough to keep a bid underneath the EWG. But note on the high today, it's moved that wave 3 over, and it may not be done yet. But certainly this is not following along with the economic data that's been coming out of Germany. This is all geared towards monetary easing, I believe, in my opinion, on what's going on there. And then if we look at the INDA, whether you trade the INDA or the Nifty, there's the dueling investment managers, I call it now. Some are saying that money is fleeing. It's time to get out of India. They've got some issues, et cetera. Others are saying, nope, they're taking market share from China on the production side of things. And this pullback is a good opportunity to buy the dip. Regardless of whether we go up or down from here on the INDA, with the long extended run it had to the upside, this corrective move was warranted. We're moving back down. We had a little bit of a bounce there. We almost got to the 100% extension. Now we're down testing this wave 3 low. And perhaps we do need to actually come down and touch this, because the B wave was right at 50%. So even though we've gotten awfully close to the 100% extension, we haven't actually touched it yet. Not every time, but more often than not, these fib levels actually get touched. So it's not just like it's an area of a target price, like, oh, there's 100% extension, so we should move somewhere down in that range. Normally, they actually get touched. So perhaps there's a little more downside to go here on the INDA, and then at the very least, we should be setting up for a wave 4 bounce at some point in time. The algorithm was pretty spot on here. When we had this bounce right here, you had to wonder, is that the wave 4 starting? But the fact that the algorithm still kept this 3 in the active phase rather than in the confirmed, then that lets you know that the potential for exactly what happened is still there. We could make a lower low on the wave 3. So a good indication there on how the algorithm may have kept you from having an early entry on a potential wave 4 bounce. It wasn't quite ready yet. So continue to watch that. If you're looking for an entry point on the INDA or the Nifty, I think you need to just wait a little bit longer, be a little bit more patient on what happens there. And then FXI, we hadn't looked at Canada lately. We did have that breakout pattern from the FXI as well. So we had this triangle breakout. So pretty nice move here on FXI as we continue to move higher. And we're starting to get somewhere in the area of where this could end. I think the market has been kind of happy that Trump's tariffs and chatter on China has not been as severe, it doesn't seem, as it has been on Canada and Mexico. And so that's given a continued bid under this. So we had the breakout. We had that in the volatility strategy as well. And this one also is trying to hold this breakout move. And we'll see how much more there may be behind this. Perhaps there's a little bit more to go, or maybe we start to run out of steam here at some point on the FXI. But pretty much acting as you would expect with the triangle breakout pattern, and then not quite the dire tariff news that I think many people expected from President Trump on China. He and President Xi apparently had a very good conversation and have come to some agreements, and he just seems to have taken it a little easier on them than what a lot of people thought. All right, so let's take a look at a couple of things here. Previous case studies on Apple is what we looked at last week to move up to 240. It's having a good day today. It consolidated since we talked about it. And so we're breaking up, but it has hit the 50-day moving average on the high. So it's going to need to break that to get to 240 that we talked about. But nonetheless, a pretty nice bounce day occurring in Apple. So we'll continue to keep an eye there. And then the case study that I wanted to share with you for today, I'm going to take from our AI. You can see it's on TMUS, which is T-Mobile, and having a nice day today. So this gives you, for those of you that may not have subscribed to the AI signals in the software platform, just giving you a little bit of an idea of what you get when you do. And you get these target prices, a score, a fail zone, which acts as a stop. T-Mobile's making a nice move. It is a little separated from the 10-day moving average here. So it's a little bit overbought short term. So perhaps maybe a tiny bit of patience here on the entry. Now notice that the score here is in gray. What we like to do when we send out alerts for our alert subscribers at evotrader.com is a score of 75 or above. So it's 1 percentage point lower than the score that we normally like to send out. But it's still pretty darn good. And then when you look at the DMI, you can see that that's solid. The ADX around 40. It could continue there, but good separation between the two directional indicators. And then you can see that we've had some consolidation in the bullish range. That's above positive 100 on the CCI. So when you look at that, you kind of want to go over to, well, let's look at the CMF and see what money flow is showing. And you've got a pretty good chart there as well with this movement to the upside, breaking above the zero line. You also have confirmation here where you have higher lows on the money flow. And so you've got a lot of good things to like about this. So we're going to go with this. We'll use 270 as the target. So we'll put our target just underneath where the AI target is. So Zack will come back in a few minutes and show you how to post that as an idea in the social media aspect of the software. Hopefully you're taking advantage of that. I know a lot of you are. I get notifications all the time. It's a great community, and you get to post your own ideas and see what people say about them. So I'll let Zack show you how to do that in a few minutes. But until we get there, Zack, let's go ahead and take a few questions.
All right. Sounds great, Rob. Let's get right into it. Let's look at SMCI for Lisa.
Yeah, I've been kind of looking at SMCI myself, Lisa. They just couldn't have beat this stock up any more than what they did. And now it's trying to find some footing here. We had a pretty nice move yesterday. It's given some of it back today. But that consolidation is really strong. Now, it is in a five-wave to the downside pattern technically. You could certainly argue that's not the greatest setup where you have a wave 3 that lasts almost a year. That's not your typical symmetry that I like to talk about within a five-wave pattern. But nonetheless, it is falling within the parameters of the mathematical algorithm. But the wave force not confirmed. It only went to 31%, so we could break above that. And what I'm watching here is the battle on how aggressive do you want to get, because if we can continue this move up here, it seems like we should be going at least to 50 here and test that wave 4, if nothing else. And if we could somehow break above 50, then we could really have something going in SMCI, where we would have a little blip at 60, and then above that, we could be back at 90 in a very short period of time. But all that's a little bit down the road. For now, it's just interesting that we're getting a little bit of a break. We had this consolidation here around the 30 level, so it hung in there pretty well. There's the line right there of consolidation. We had a bullish 1030 cross, so a little bit of give back today after a big move yesterday is probably warranted. So yeah, let's see, again, barring anything bizarre coming out of the bond market with Powell's testimony the next couple of days, probably why we're getting a little pause today. That and that we got a little bit overbought yesterday could be a pretty good entry point. So I think from a risk to reward standpoint, if you had a little bit of speculative money, and I only say that because it's not the most ideal pattern, but when you're looking at support resistance, there's a good case to be made that we could likely at least bounce to 50, if nothing else, on SMCI. So, Lisa, I think you're on to something. I'm, again, watching that very closely. It's been on my radar screen through all this consolidation, and now the potential breakout above the major moving averages, the 1030 cross, etc. Make that one, I think, pretty attractive.
Very well. Trade Simple would like to look at Nike, Nike.
Well, we haven't looked at Nike in quite some time. So let's take a look at what Nike's doing. We did have an AI signal on it. It wasn't quite strong enough, but gosh, it sure worked. It was a bearish signal, and you can see it was 64%. So even though it wasn't 75, it still worked. We went right down to the target price. You can see that how it hit the target. So pretty good movement there on Nike. So without that, we're at a wave 5 that's at 70%, but we are in the tap box. So the wave 4 right to 61.8%, a very logical place to turn and move back. You know, if you've been watching any of these, 61.8 is my favorite fib level. I think it's the strongest of all fib levels. I don't think many people would disagree with that. And we came down and made a new low. So we identified the wave 5 here. It's in the tap box. So maybe we're done here on the near term for Nike. This little bounce here is just an oversold bounce. Again, no security in any time frame gets too far from the 10-day moving average. That counts on both upward moves and downward moves. So the fact that we were too far below it, we're just bouncing back up to the 10-day moving average. So don't get this confused with the wave 5 might be over. It might be, but what's occurring right now is we filled the gap today and we're marching back to the 10-day moving average. We'll have to see if we get more out of that. If we do, I would argue that if we could break above 72.5, then perhaps that is the signal the wave 5 is done and we're making the march back to the previous 4. So I think Nike bears watching very closely as well. I'm just a little more cautious on that one today because of the fact that we're filling the gap. We're getting back towards the 10-day moving average. We're nearing resistance at 72.5. So I would want to see that level broken. And then I think maybe we have something going on Nike. So, interesting chart there as well. Yeah, you picked a couple that we haven't looked at in a while. Yeah.
It has been a while. And you mentioned your 10-day moving average theory there. Comment from Mr. Pickles here. Meta has not cared one bit about the whole too far away from the 10-day moving average theory. It was too far away before earnings, or even before earnings.
Yeah, and that's just completely wrong. I saw that comment was posted on the U.S. market update as well. All you have to do is go back and look at Meta all through here, and how you can say it doesn't pay attention to that rule is beyond me. Look, I mean, how it exactly follows the 10-day moving average. I mean, it has for months and months and months. You got a little bit above it, back down. Got a little bit below it, back up. It's followed the 10-day moving average to a T. Now, we did get a little overbought, and I talk about how things can stay overbought or oversold for short periods of time, but not for long periods of time. And so we had this move up here where it's separated from the 10-day moving average. And now over the past week, we've gone through some consolidation, and the 10-day moving average is catching up. So I disagree with that. I don't think Meta has been an outlier along that. I think it's a poster child for how it trades, stocks trade to the 10-day moving average here. We got a little vertical here and went sideways back to the 10-day moving average. We're doing the same thing now. They can get a little separated from the 10-day moving average, but for short periods of time. My comment is no security in time frame gets too far away from the 10-day moving average, and it doesn't do it for very long. It can do it, but it's going to be a very short-lived event, and just feel like Meta is a perfect example of that. If you just go back and look, aside from the last week or so when it was overbought for a little bit of time, again here, down below in April, where we got too far below the 10-day moving average, right back up to it. So, yeah, I disagree with the comment.
Thanks, Rob. Next up, we have Jim. How low can Tesla go?
Yeah, it can go down, Jim. We talked about this yesterday as well. We've got a descending triangle pattern. We clearly have confirmed the breakout to the downside. We've got a bearish 1030 cross. The only resistance that we have is right where we are, right in this area right here. So you can see that this is it's got to hold here, and if it doesn't, we're back down at 250. And I know there's a lot of people bullish on Tesla, and you don't want to hear that, but that's a definitive downside breakout, and it's in an area that had a pretty quick run up, which means there's not much resistance down. So what you have to hope for is that we are a little bit below the 10-day moving average right now. We're in an area of congestion, not a strong one though, a little one, but we do have a wave 4 right around 50%, and that could hold, and we could turn and move back up in a wave 5 from here. So if you're bullish Tesla, that's what you want to see. You want to see a turnaround right now. So the next couple of trading days, if you're bullish Tesla, are going to be key to see if it can hold here and turn and go back up. Because if it doesn't, we're going to be back down at 250. So we're just going to have to, the next day or two are really, really important in the world of Tesla.
Let's go to AMD for ERV85.
All of a sudden, we're getting AMD coming back again a lot, Zach.
Resurfacing, yep.
Yeah. We talked about this, gosh, a couple years ago when it seemed like AMD was every single event we did. But we're just kind of hanging here. Same thing I talked about yesterday. We're tapping the 10-day moving average on the high. It's a very odd 5-wave pattern. And I say that because the wave 4 only went to the 23% fib level. Elliott didn't like that. He felt like that could be an early outlier of just a blip in an overall longer-term trend. In other words, to summarize without wasting too much time here, with this pattern, with the wave 5 only extending 36%, Elliott would look at this and say, I think there's a chance this could all relabel and this could change to a 3. And that wave 4 wasn't a true wave 4, only going to 23.6. But he was such a believer in the fib levels that in his algorithm, he would allow that to go ahead and label, even if it hit that fib level. But in his notes, so that in the Elliott wave world, there's no guidelines and rules. And so this would be more of a guideline thing. In other words, things that he noticed that he would make notes of in these patterns. Now, perhaps this wave 5 pattern is completely done, and we bounce back up to the previous 4, which is what should happen if this wave 5 is complete. But it's a difficult thing because you can see, just aside from all the Elliott wave and everything else, if you just draw an old-fashioned trend channel here, you can see that we've just been moving lower in this pattern of lower highs and lower lows. So just a classic old downtrending pattern, aside from all the fancy stuff that we talk about with Elliott wave and zigzags, etc. So an old school trend, if you will. So we're going to have to see if we can get back above this. If we can get back above the 10-day moving average and close there, and then break above the wave 3 low, then perhaps that wave 5 is done, and we are moving back to the previous 4. We just can't say that until we close at least back above the 10-day moving average. So we need a little more information out of AMD as far as whether or not the next move is higher or lower. But yeah, it's a little oddity here within Elliott wave on that pattern within AMD.
Thanks, Rob. Let's check out Shop for Manuel.
I haven't looked at that one in a while either. Wow, you guys, I love this show. Stuff that you guys come up with are good ones. Now, we're going to have to wait and see what happens today on Shop, because if we were to close right here, look at that doji with that huge bar, something would happen tomorrow for sure. But we've got time into the close, and it may not be anything like this bar looks right now as we get into the close. But you can see the tap box is higher. And depending on where we close today, big outside day. And what that means is that the high of the day exceeded the high of yesterday, and the low of the day exceeded the low of yesterday. So this entire bar is outside of both the high and close from the previous day. That's what we mean by an outside day. Now, when you have an outside day and a doji, even though a doji technically only means indecision, it doesn't necessarily mean change of direction. Oftentimes there is a change of direction with a doji, but that isn't what the doji itself means. It just means indecision. So if you get a big outside day with a perfect doji like this, I think we would see something significant happen with Shopify tomorrow. So the question would be, is this wave 5 over and the big move is back down to the previous 4? Or does it mean we've just consolidated this, exceeding the wave 3 high, and now we're ready to make the run up to the wave 5? I think that could very well come into be. But let's see where Shopify closes today, what this bar looks like at the close, and then very specifically what happens tomorrow is going to tell a lot, I think, on the next directional move out of Shopify. So, yeah, really interesting charts everybody's looking at today.
I agree. Very well-informed questions. So with a minute till the hour, if you want to go ahead and head over to the platform, I'll show everyone how to post the idea.
Okay. Sounds good.
All right. So we'll transition over. Everyone can see the menu view jumping off point of the Hub platform. Rob was mentioning a bit earlier. I'll drop that link to sign up for the Profit Dynamics Masterclass as well if we're interested in that. Going to be lots of valuable material and insight shared there. So to post an idea, we're going to go over to this light bulb at this right toolbar. We'll click New Idea, and this is going to be an official idea, right, Rob?
Correct.
So we're going to create an idea here on T-Mobile. Now that that's selected, we will go to a target price of 270. And what was the time frame on that one again?
Let's just stay with the 3 months.
3 months, very well. So as we can see, we have these fixed intervals of time to select here. So we'll go with the 3 months. We're going to come back and make this look nice and pretty very shortly after this session is over. But I am going to go ahead and post the idea just so everyone can go in and interact. As I've said before, opposing opinions is what makes markets. If everyone agreed, there'd be no trades, no transactions that were occurring in the market. So whether you agree or disagree, we welcome your opinion and encourage you to comment and show supporting evidence one way or the other. So it was pretty short and sweet for today's idea. I'll pass back over to you, Rob, to provide final thoughts.
Sounds good. And a lot of the charts we were looking at are going to be very dependent on what happens in the next day or two. And I'm not sure we're going to get too dramatic of information until Chairman Powell is completely done with Congress tomorrow. So perhaps this triangle here needs another day or two before we start to see the breakout move, but things are going to happen. So pay close attention over the next week or so. And when we talk again next week, we should have some really interesting things to talk about. Although we have a lot of interesting things to talk about today. So thanks as always for taking time out of your day to watch. Hope you found that informative, and look forward to talking again soon. Enjoy your afternoon. Take care, everybody.